Nick had a dream, working in the tech scene, a 9 to 5, living that American dream. He walked the halls of Amazon, pleasing Jeff Bezos, but one day it ended like a punch to the nose. Fired for reasons he couldn't understand, lost in the system, just another number in the sand. But Nick was a fighter, he wouldn't back down. He packed his bags and headed out of town. Oh, Nick, the day trading cowboy, running through the stocks, searching for joy. He left his old life, turned his back on the tech world. He's living life on the edge, taking risks with no regrets. Nick was a hard-working man in a small town with big plans. Working at Amazon Web Service till he got called in, fear in his chest. But oh, Nick didn't let it bring him down with a fire in his soul. He left that
What is going on, everybody? Happy Sunday. Hope everyone enjoys my stupid little song. Merry Christmas week. How are we all doing? Sound good, look good, feel good. Christmas Santa Claus jacket on. Hopefully we get the Santa Claus rally or the Santa Claus bloodbath. Either way, it's going to be red one way or the other, whether Santa's leading us to the promised land or all the way down to some level that we're probably going to talk about here shortly. Yeah, I decided to throw on my suede leather fake, whatever you want to call it, Santa jacket, and I'm going to wear something fun tomorrow. It's Christmas week. We're going to have some fun. I don't know exactly what's going to happen this week. I think a lot could happen, but looking at the volatility, the violence, the two-way action that we had, I'd be shocked for a quiet, at least tomorrow and Christmas Eve. If you guys remember I think it was last Christmas Eve, actually, December 24th, we had a pretty violent sell down. I know because I got caught with my pants down trying to long it when I was in the airport, just because of the volatility, trying to capture some points as I was traveling home to see family. And, lo and behold, we just kind of sold off all day. So when that tends to happen, you should be along with the trend. And, I think we saw that like 2 different days. Obviously, we saw it post FOMC where you pretty much just had to close your eyes and sell it. And then you have a day like Friday where right after the PCE print, right after some little bit of consolidation kind of in the open, we were just off to the races on what was almost a typical trend day Friday move to the upside. So, nothing shocking there. I mean, you kind of had to feel that people might have gotten real bearish, especially after, the Asia and London session kind of continued to sell us down. On whatever it was, Thursday evening into early Friday morning with our friends overseas. And naturally, we had a nice little wick down, and then we're off to the races in ES. But we kind of stopped at an area I think Jay was talking about on Friday on ES, kind of the 60-40 spot. I was kind of screaming where it could end was going to be, pretty much around, I think it was like 810s. I think Jay and I were talking about as if you were going to actually short this and step in front of it. If you remember on Friday, I did, but it was very early before I would say you established the trend, you established the single prints, and it made no sense to short at that point. But the high of the day was 812. And I think Jay and I were talking about, well, the only place on NQ that made sense was right around 810s, which was kind of going back into a spot in November that we'll talk about a little bit. So there's a lot that can happen this week, but we'll dive in a few minutes. But if everyone who's joining us, welcome to Market Kickoff. We're going to go over, it's going to be a more abbreviated session this week. The first piece is going to be, there's no earnings this week, or there's a little bit of, there's I think 1 or 2 companies reporting tomorrow but they don't really matter, I guess is what I'm saying. So we're not even going to talk about earnings this week. There's a couple economic numbers. We're going to talk about some of the options data, but thank you guys for joining us. I know it's your Sunday. I know it's a a few teams are on the cusp of losing their playoff eligibility, as well as potentially clinching it in the NFL. So if you're joining me, I'm assuming your team has already locked it up, or you're not a big NFL Sunday person, and you're here to kind of catch some markets for the week of where we may go and what we may do. But this is not a trading hour. I actually am going to be. Someone was dumb enough to give me the keys to Coach Dakota's show tonight. So I'm going to be covering slow markets later. And hey, Nick may even take a trade. It will likely be in a combine unless there is something just juicy that I am jumping out of my chair to actively trade. But we're going to see if we can find something tonight, since I don't get the opportunity that much to trade Globex in front of you guys. So let's see if we can find one later. But for the time being, let's get into some prep. So, as we kind of alluded to on Friday, we obviously kind of shot out of the gate. We had a pretty violent week overall. We were kind of stuck in this, multi-week consolidation in the early part of the week, and we continued just to kind of chop, rotate in that balance range of about 50 points right up until Jay Powell decided to steal Christmas and just send us down the elevator shaft. If you remember, it wasn't so much the fact that they cut. I think everybody and their mother was expecting a 25 basis point cut, but there was a couple things that I feel like the market just did not like after that reaction. The first piece was Powell basically used the verbiage on like they almost didn't cut. I don't remember the exact terminology he said, but he kind of said it without saying it, that we were pretty close. It was almost like a coin flip or whatever, however you want to look at it, that they weren't going to cut at that point, or there was clearly discussion around pausing this last FOMC. So the market, first of all, hated that. But also I think them forecasting only about 50 basis points of cuts in 2025 was the big reason the market got caught, not really positioned for that. So naturally we rotated down. So that kind of leads us into this week. I think Friday, a little bit of some OPEX shenanigans, as well as some short covering, as well as, just the initial instinct to buy the dip, all of those kind of flows working together to push us back up. Naturally, you were going to have a reflex bounce either, whether it was Friday or it was going to most likely be on Monday if we didn't get it to end the week last week. So nothing should shock us. I think the velocity that we kind of did shocked me a little bit. I didn't quite expect it out of the gate the way once we finally left the range, the opening range, we pretty much were just off the races, and it caught me a little off guard. I expected at least one reoffer or for shorts to come back in and actually defend any aspect of their positions for those 2 days, these last two sessions. And then especially with that overnight trade being, just kind of continuing to step down, there was just nobody looking to step in front of this. So naturally, when we have that, you had a reoffer back around 60/40s, which was an area that Jay was talking about. And kind of going back, it is a longer time frame, low volume node, where the rally kind of died. And from an options activity, it made sense. In fact, I actually took I never trade 0 DTEs, but I took some 0 DTEs basically right here. Instead of expressing it in an ES trade, I decided to express it in SPY options, looking for a rotation kind of back down to basically where we settled at the end of the day, which was pretty much around 59.30s and around 5.90s on SPY, where I, kind of got out of this once we had that flush towards the latter half of the session, that last, bit of power hour, I decided to cover. But I was looking for that close somewhere between 9:30. I basically was looking for a close under 950s to, monetize the position I took at the end of the day. But every once in a while, I'll take that options position instead of expressing it in ES. It's just kind of what you're seeing sometimes with the way on an OPEX, it might be flowing or what's happening, but it made sense that we might just kind of rotate off of that area and settle somewhere closer to 5,900. And we'll talk about why going into the close or at the close. We'll talk about what the, options data kind of looked like on Friday and what it may mean for us going forward. But going into this week, I love that kind of 630s to 640s, 620 spot. I don't know exactly where I'm going to place my weekly pivot so far, just kind of looking at this. I'm curious to see the open, to be, honest with you guys here in a few minutes, and how we kind of move in the early parts of this overnight session. But I think this 6030s, the 6040 spot, at least in the early part of this week, going into Christmas Eve, which I believe is a half day. It usually is. I just don't know off the top of my head. I'm going to go on a limb and say, yes, it is. I think it is. I think I'm just overthinking it. But yeah, I like this same general area. So I would love to see buyers continue to kind of push us back above 6,000 on ES. And do we start to build volume above kind of that 60-20, 60-30 spot that we were having trouble kind of maintaining above on Friday? If we do that, I would expect us to potentially go back up and go tag 6,000 on the SPX option, or not options, but on the SPX level. I think the spread was like 75, 76 points roughly. So I don't know at the top of my head what that number is, but if we build above this area, I think we go towards, that 6,000 spot on SPX, which is probably this area here, this 60-80s, if I'm just doing some rough math in my head. So I want to see buyers push us back above 6,000 and continue to build some volume above 60-30 before I'm really looking to get long, just given the violence of last week and just given it's end of year. Do people take some profit? Do people kind of focus on, hey, how are we going to allocate for 2025? Do they kind of take some profit and just see, hey, is this an actual pullback that we can eventually buy and, potentially have at lower prices? I'm just not going to be the first person in a holiday week with a half day on Tuesday to kind of want to jump in and buy this right now. I'd much rather see us kind of continue to hold above 6,000 before I'm really looking to get long ES. Otherwise, see if we can find some buys a little bit lower. So that's why it's kind of sitting there. This is a longer time frame, value area low as well. I think even the November value area low is somewhere in the, I think it's like 5980s, 5984s or something. It's like in this general area. So it would not shock me either if we kind of came down a little lower, kind of consolidated, chopped around in that general vicinity before we kind of make a decision. I almost put my pivot there, kind of in this 5980 spot too, but I think for the time being, I'm going to put it a little higher. I want to see something from buyers. I want them to show me that Friday was not just OPEX, not just shenanigans, not just short covering, and that this was really a dip that we all should have been buying down here before I really get serious and kind of expect us to maybe rotate back into this, multi-week value range up here above kind of that 6,100 spot, 6090s on the H contract. So we'll have to see exactly how this evolves in ES. We are coming into the open here in a few minutes, but if we were to get continued downside, let's say kind of go retest last week's lows, another area that I'd be watching for buyers to come back in and step in and buy is going to be back down here between kind of the 5840s down towards the 5820s. This is kind of the election day pump area, the bottom edge of that range before we kind of went out and made a new all-time high and did that. So if we were to get downside and kind of fall below that 5980 spot and potentially start rotating back towards last week's lows, that's where I would expect buyers to really step in and defend, because otherwise we have undone the entire kind of Trump rally post, November 6th, November 7th, whatever day election was. So I would expect that to be a little bit sticky of an area before, every bear on Twitter over the last 2 days for the weekend talking about the Armageddon that's going to be 2025. Before they can get too excited, that's the area that I would expect to be definitely defended by buyers and everybody trying to continue to kind of buy the dip and save this thing. Unless we get below kind of that 5,800 spot, I would not be too worried. I expect them to step in there in a big way. So everybody for joining us. Thank you. And welcome to Market Kickoff. We are going through ES's prep for this week, this lighter week. It is a holiday as a reminder. Tomorrow could be some good trading. Even parts of Tuesday on Christmas Eve just historically has not always been a good day, a good trade, but last year it was, if you were on the right side of it. So we'll see what happens with that half day on Tuesday. But if you've had a good year, if you had a good week last week, if you were on both sides of kind of the post FOMC flush, as well as any time getting long, except for the end of the day on Friday, maybe think about, if you get one or two good trades tomorrow, maybe look at locking it up for the year. That's in a weird way possibly a good decision. There's going to be plenty of trades to happen, in the new year. There's no need to ruin your Christmas in theory by doing some stupid things on Monday and Tuesday and, putting you in a piss poor mood when you should be spending time with your family, enjoying the holidays, eating some good food, enjoying maybe a nice cold beverage or two. So, no one do anything stupid this week, I guess is the first thing that I could say. With us looking at the holiday and trying to find potentially some good opportunities this week. I think there will be some, but there's no need, I feel like, after Christmas to really get too crazy on Thursday, Friday, kind of coming back into this, because the market may just kind of be in a weird spot until we get towards the end of the month, or even into kind of January 3rd, 4th, when people are actually back at their desks after whoa. And we gap up. Of course we do. Why wouldn't we just gap right up and continue this? And yes, shooting twos, 60 15s and climbing. 60 16s, 17s, 19s, 20s. I feel like an auctioneer. So ES and NQ just ripping to the north side, undoing every aspect of this little, OPEX flush that we had towards the end of the day. God, did not exactly see that coming, but here we go. So there, if you were continuing to buy the dip on Friday, you feel pretty good about that open, and the algos just immediately clicking the green button. That's funny, man. Of course, someone, Devin in the chat says, awesome, done for the day already. Congrats on being long, sir. Well done. I don't know how you people do that. Just immediately jump in and catch 5 points like that on ES. That's just nuts. Good for you guys. God, we were trading. What was settlement? And then like 87s, 90s, something like that. Like 95s and still going. We're at 60-20s. All right, let's jump over to NQ, since that was kind of a wild open, and that's what we want to talk about too, is going to be what the Nasdaq's doing, because I think there's an opportunity there this week. Not GC. What am I doing? All right. So we're going to zoom out a little bit. Who remembers the lovely area and on TopstepTV on Friday on Fast Markets that Coach Jay and I were talking about, and we physically called this out and showed this high volume node right here around 810s. Did anyone take that short? I'm just curious, or did anyone cover up there? Somewhere between kind of the 780s to 810s. If you did, that was, oh God, we are still going. NQ still ripping. Yes, now it tagged 22s, back down to 20s. What a fun Sunday. Maybe I'll actually take a trade on slow markets later. But yeah, this 810s spot, if we zoom out, Jay and I were talking about this on, hey, if you were going to, for some reason, step in front of this steamroller that was the Friday rally, the first place that we could see it, and keep in mind, Jay and I were talking about this somewhere between like 630s to 650s. I think it was after that like next breakout we had. We're like, you could step in and buy this at any point, but where would you potentially sell it? It was going to be at that 810s kind of spot, which is this old point of control going back to early December, as well as we were talking about this this high volume node here that would make a lot of sense to act as at least some aspect of resistance for at least a few minutes, maybe. I mean, who knows on that kind of Friday move. But what it tells me is that NQ right now, we're in a low volume node on a longer time frame. We could go either direction. And basically what I'm saying is NQ's got to get over 800s cleanly before you really want to continue to buy this. Just knowing how it can move, knowing these 2 days of volatility, that's the first place you could really look at for kind of a true breakout to the next area, which likely is another 100 points higher from there. So if we could cleanly get above 800s and you see volume building there, by all means, get in front of this, get on the Santa rally, and this may continue who knows how high. If we basically shake off FOMC and continue marching to the upside, 810s is that kind of spot. If I was placing a pivot, that's where I'm putting it this week. I want to see NQ above that before I'm really getting long at these spots. I'm not really interested in getting long right here in the 630s unless we're in a trend day like we were on Friday. Even above 705s, I could see us continuing to kind of build up there. But otherwise, if you don't see buyers really step on the gas and continue to push, even like they're doing right now in tomorrow's session, we could naturally rotate back down towards the 500 spot, 560s, maybe even 490s, down to 450s is kind of that area that I'd be looking to buy 100%, because you have multi-weeks of consolidation there. If we continue to zoom out, going back towards the that election, that was basically the election kind of high up here. Basically that 21,550s, 560s, even all the way up to 600, I think was the high. Yeah. So that would be kind of the first place to really take a stab long. If we got some, rotation back down towards kind of the not Friday lows, but the afternoon lows on Friday, that's where your first place that you could really step in and buy this is. Otherwise, yeah, we could rotate all the way back down to these kind of, election consolidation areas. And if you lose it, gets a little weird, because the logic would be if you lost that kind of 450 spot, maybe you get that rotation back down towards kind of where we were trading after the open on Friday, which is going to be that 200s to 250s, 270s spot. The first place I tried to short was basically right there around 270 right here, looking for that to potentially be a spot to reoffer after we kind of went up in the pre-market and we're just kind of consolidating and shop. And if you guys remember, I had a pretty tight stop, pretty much I think it was at like 8 or 80, 88, something like that, like a 17 point stop, 18 points, whatever it was. And thank God I did, because we just took off and ran me over. But that was a little bit before we really kind of broke out to the upside. So looking at NQ this week, we're in the middle of kind of a couple areas. We are in this low volume node here. Do you get that rotation all the way back up and potentially break out above 800s, or do we fall back down towards the 500 mark? The logic would be just be on the side of momentum this week in the early part of it going into Christmas Eve. If we are bullish, if we are building volume above 800s, you guys should all be part of that. You should not be trying to, short this. If we get momentum to the upside into Christmas, it just could turn into, it's pretty bullish. It's looking good. And, there's nobody really trying to sell this like they were last holiday season. And if that's the case, just get along with it. Don't be the first person to try to sell this, because eventually it turns into just a low volume and the algo is just moving with the momentum of that trade. So if we start getting, movement to the upside, look for buyable dips as always. And you'll be on the right side of the trade. That was obviously the move on Friday. I tried to short it a little early. Or not a little early, in the early part of the session, using the right stops. There's nothing wrong with that. You're letting the trade thesis play out. But at the end of the day, it turned into a trend day to the upside, and just getting long at any point before basically lunchtime, you were on the right side of it. So let's see if we can continue that this week. Like I said, above 800s, we probably are going back towards 22,000, maybe 22,100. Potentially kind of filling in some of this other volume from these old weeks up here. But for the time being, in this kind of 7s to 650 spot, I don't really want to be on either side of the trade unless you're just kind of trading with momentum. I'm not initiating right here in this low volume node. I'd much rather see if I get it on a trip back towards 800s. So we are still just marching to the upside. ES trading at 60.25s. So if you called gap up and go, congratulations, you won. And as always, guys, if there are questions, feel free to start throwing them in the chat. We will compile them. As I said, since we don't have much going on in terms of earnings this week, or even data with the holiday, with Christmas, with the half day on Tuesday, it's going to be a lighter market kickoff. So if you got questions, this is a good day that we can get them in and get them asked. If not, maybe we'll get a bunch for slow markets if there's not a good trade at that point, as Asia is opening up. So we'll have things to talk about. But yeah, let's jump over to GC. How about that? So GC actually had we talked about this last Sunday, which was we were in this multi-week consolidation zone somewhere between 60 or 2640s and kind of the 2700 spot. And we were talking about, which way it may go eventually, you kind of go with that breakout of either side of this. It went to the downside, but now we're right back into that same consolidation zone. So as we were saying, I'm still looking to kind of buy it in the lower side of this. So this week, looking at it specifically, somewhere between the 2640s and 2630s on a long, on GC. To short this, I mean, I don't love the idea of even thinking about shorting this unless we break 2600 pretty cleanly. I think you're much better off looking to buy it in these low volume areas for a trip either back to value in here in the 2650s or taking it, 2640s and looking for that breakout to the upside if we can get above 2660s. It's the same trade that we've been talking about. It's just continuing to kind of consolidate within about a 40 to 50 point range. So nothing too crazy to be done if I'm being honest in this spot. Like I said, I'd be still looking to long this, but knowing we are still kind of, on that second rejection of the higher time frame, kind of the 2740s, I'm cautious getting long at certain spots. Like, I don't know if I'd want to initiate a long above 2700. I'd probably cover a trade there, but just knowing how many times it's rejected again and again, I'd much rather buy it a little lower and see how much I can kind of ride back into value here. If we were to lose this 2600 spot, you're coming down here towards the 2570s, down towards the 2550s, which once again, I'd expect buyers to continue to kind of step in there, defend it, and continue to kind of hold us in this general area. I'm still bullish gold, guys. I still think 3,000 at some point in Q1 or Q2 of next year. So we'll see if that actually materializes, but I think 3,000 next year is very possible. We'll have to, wait and see. I'm still looking for the right opportunity to get long in this and some micros in my personal account. But for the time being, it's provided some good trades here and there, as long as you don't get caught kind of stuck in this 2660 spot. But yeah, let's see if we can find a good gold trade this week. I actually am, now that I have live data for gold in my Topstep X live account, I'm actively looking to trade it because I'm paying for that data as a professional trader. And I'm paying for multiple professional trader data feeds now. So I got to at least make sure it's worth my money. So a gold trade a month, hopefully that's positive, at least pays for itself. And, see if we can find a good opportunity in GC this week. But like I said, somewhere between kind of this 60-40 spot that we are in down towards, even that 60-26s, 27s being this low volume node area, I could see. Yeah, we'll wait and see. I don't really want to initiate right here, right now, but I do still like leaning long in GC. Oh God, I don't even want to talk about Crude, guys. Crude refuses to break out and refuses to die. Can we talk about this? I got an update. Let me refresh. A new version. Oh God. Let's talk about the miserable trade that is crude oil. How about that? So, how many weeks is this now? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. I'm not going to count this one. 12, 13. So there's been over 3 months of us just being horribly range bound. I can't even say violently range bound because it doesn't necessarily feel that way. It just feels miserable. This is when, if I go to hell someday, this is the trading environment that I'm going to be interacting with. Just a forever range bound, unable to break out either directions type of trade. So nothing has changed in the prep from last week to this week. Crude is still stuck between 70s and 67s. I don't want to initiate anywhere in the 69 area. I would much rather be hoping, praying for a breakout of the 70s or looking to sell this in the 70s. Somewhere between kind of that 70-20s to 70-50s spot. I don't know what's going on, guys. Why is this? Why can we just not break out of this range with all the things going on in the world and how affected crude can be by geopolitical, by, different things going on in the world at any time, that we are just stuck in a multi-month consolidation range and making one of my good trading buddies, lose his mind, including me every Sunday when I have to prep for this for you guys. There is not a good trade here. If someone smarter than me can tell me a great opportunity in this area or something else they're seeing, because I'm still looking at crude in a 4-hour downtrend and in a multi-week consolidation. And until we kind of leave that, there's not a lot to do here outside of, play the edges. You long 67 with a stop, or you short 70s to 71s with stop. And you hope, excuse me, you hope that you're not finally on the final break of this, on the wrong side of that final break eventually when it does happen. But that is the play, guys. You just, eventually it will, and it will be, I would imagine, extremely violent once it does finally leave this range. Like if it is trading below 66s, I mean, at least 63s, I would expect us to go break down towards if we can finally leave this range. Like I would not be shocked if it tests here. And if it goes lower, that would make sense. Just knowing how breakouts eventually, breakdowns and breakouts eventually happen. The same thing on the 71s. Like once we get this, yeah, I would expect us to kind of go back up here towards 75s and, see kind of what happens there. Do we find sellers again? And reoffering that spot. But these 68s, 69s, guys, I have zero interest in not only placing a trade, but even looking at crude outside of helping all of our crude traders who I hope are not just getting chopped up and, taking stop outs for no reason, entering trades. This is just a situation, guys, where there's better markets to be in when it's like this. There's no need to enter in the middle of this garbage. This is when we talk about, looking at other assets and, what else could I be trading or taking opportunities in? It ain't crude right now. In my opinion, equities right now after last week is a better place to look, as it usually is. It just tends to be, there's bad weeks in equities, but it ain't look like this. Come on, have you ever seen ES in this kind of range? Maybe not since, it's been at least 10 years since we've been kind of stuck trading like this. I know in today's market, 5% return on the S&P is insane when you have meme coins and Nvidia moving 10% in a day. So, why get stuck in that tight of a range, I guess, or why be looking into trade something like this? Unless you really know your stuff and you're in and out of this every single day and you're taking a few points here and there and you got your levels. But for me, as the kind of trader I am, this is miserable. That is miserable. You got to really be on the right side of it at the right time. So I'm tired of talking about crude. It's dead to me for the time being until it leaves 71 or 67s. What's ES doing? Are we still? No, we came back a little bit off the highs of 60.26. So rejected at the bottom of my pivot. So maybe I'm doing something right so far. All right, let's take a quick peek at, crude is cooked. Crude is cooked. It is for the time being. Let's take a quick peek at what's on the economic calendar for this week. It is a lighter week, as you guys know. Let's take a peek. I don't think there's anything too crazy. Going into tomorrow, you do have the Chicago Fed Manufacturing Index and consumer confidence, but I don't think much of this is going to really move the market. I'd be shocked if any of this really, causes anything. The big one to watch, in my opinion, is going to be the 2-year auction at noon. So if you're still trading around lunchtime tomorrow, just be aware that could provide some volatility to a time of day that usually doesn't have a whole lot. So that would be most likely more market moving than potentially, some of these other data releases in the pre-market. Going into Tuesday, you have durable goods as well as new home sales after the bell at 9 a.m. Central. As you guys remember, this is, I believe, a half day. So just be aware, you will have to close your positions a little bit earlier. They will get auto liquidated. I can't remember the exact time. I think live accounts, you have about 30 minutes before the close. If I remember correctly, I think it's like 11:30, maybe it's 11. I will double check, but I won't be trading at that point. If I can't get a good trade in kind of the initial open off the New York Open, yeah, I'll be hanging it up for Christmas Eve. There's not a whole lot to do besides I'm doing a 16-pound brisket on Christmas Day. So I got to get that prepped on Tuesday anyway. So I'll be a little busy in the latter half of Christmas Eve, making sure that's all good to go for the big day on Wednesday. And then going to Thursday, if you are still going to be trading with us, we will be back on TopstepTV, so there will be some good content for y'all, hopefully some good trading. But we do have initial jobless claims and continuing jobless claims, and then some crude inventories. Maybe for once that will actually do something to push us out of this range. I highly doubt it. And then Friday, balance of trade, retail inventories, wholesale inventories, case chiller. Nope, nothing too crazy. As I said, super light week. The big one's just going to be jobless claims potentially on Thursday and durable goods on Tuesday, the ones to just watch out for, as well as that 2-year auction tomorrow. So nothing insane going into this week. Nothing that I think is really going to pull any sort of insane move, even like we saw with PCE on that type of candle. I'd be shocked if anything actually moves the market that much, unless it's just a wild print. But who knows? I just never know these days what's going to shock the market and what isn't. You know, I'll have to wait and see. And then we'll jump into some options here. Let's talk a little bit about how Friday closed as far as the gamma data that I was looking at. And we've always talked about on Sunday nights, the big levels to watch this week. If you guys remember, everything was pretty skewed to the north side above 6,100 as we were looking at, I think, a lot of positioning going into year end. And maybe, like I said, these ones don't have expiration in theory. This is everything on the chain. But if you remember last week, you were seeing a lot of that positive gamma exposure continuing to kind of stack above 6,100 and it growing pretty significantly. Now it's probably a little more even of a distribution, but you are seeing a little more skew to the negative side towards the downside. So I don't think people want to get caught with their pants down the same way they were on Wednesday. When you have that violent of a sell and you're in an options expiration week, and we have just been up and to the right for basically since August, you kind of are in a situation where the market's not necessarily hedged well. And when we get that type of violent move to the downside, it almost is like it can stair step further and further because how people have to reposition to hedge. Market makers have to make sure their exposure is in the right side so that they're not, caught in a bad position as things move lower. So now I'd say the market's a little more effectively hedged for some downside just on the options front. So going into this week, I still think there's a good chance we can continue to move up if we don't see something violent in the early part of this week. Most likely towards year end, we're just going to continue to kind of move a little higher, consolidate, things like that. I don't know if we're going to hit an air horn between now and New Year's Eve, but we'll see. I think the areas to watch this week are going to be that kind of 6,000 SPX spot that we were talking about last week as the big strike, even on Friday for fast markets. I was making a joke that after all of that volatility and downside coming off FOMC, if the market still found a way on OPEX Friday to push us all the way back and bail out all of that poor positioning for downside from market makers, from, everyone just buying calls and closing their eyes and being profitable with it. I basically was saying if those 6,000 calls monetized on the December, expiry, I was just going to throw a chair because in my opinion, when it's that positioned one way and you get a violent move and then they get bailed out because I guess how poor of downside hedging and things like that, it's one of those things that would just made me mad just because you shouldn't be rewarded for, I guess, having that much of a, skewed to the upside type of position. And just not necessarily the way markets should always function. So I'm thankful they didn't get bailed out and be able to monetize those 6,000 calls going into the December. But now I'd be looking at the 5,900 SPX strike as well as that 6,000 strike as potentially kind of your range area for this week. If we don't get real downside, I would expect 6,000 to kind of continue to act as resistance, at least in the short term part of this week, maybe even into the end of the year. I think that strike will matter. It may magnet towards it. We may reject off it. We could blow through it. This, like I said, is Friday's close. So we will have to see how positioning kind of changes with the bullishness and how typically you see us move up the week of Christmas. Obviously, that wasn't the case last year. We'll have to kind of wait and see how the market reacts. I do think sometimes after, options expiration, you kind of now might have a chance to see how the new news with FOMC or the fallout from FOMC, the actual reaction to FOMC or their new positioning based on how the market feels could occur tomorrow. It could occur in the early part of this week. It could also occur in January as, people are repositioning and creating their new books for 2025. So we'll have to see how it kind of adjusts from there. So take Fridays, I always say take the screenshot from the Friday of OPEX with a grain of salt, because it can shift drastically the following session as, those are off the books and people kind of reposition going into the new year, especially end of year, end of quarter. Grain of salt a little bit with this. We'll see how it shifts tomorrow morning a little bit on the longer time frame, but just be aware that is just something to keep in mind. We are still in negative gamma as well, technically. So this just tends to be that positioning from dealers, from institutions, just tends to be with the side of momentum a lot of the time. So they will sell into weakness. They will buy into strength, which is why you basically have seen those moves the last two sessions in the way they have. They're just kind of following based on positioning in terms of options when you're in negative gamma. So just keep that in mind too. I would not necessarily be looking to fade trend days at all this week. But in the event that, a one that materializes or establishes itself, I would say get on the side of that, because as long as we're in negative gamma, it just tends to move in the same direction. I'm not going to explain negative gamma because it is a very complex concept that I even myself do not feel like I am an expert at. If you're curious, guys, there's a ton of information. I am not a massive options trader. I just use it to move futures or move positioning for futures. So if you're curious exactly what it means, the most elementary definition that you could think of is that the market just tends to move with momentum in the direction that it's going when the market is in negative gamma. That's the way to think about it. Anything more, feel free to take, research or go get a better understanding of it. But that's the basic concept behind it. I wouldn't look too much more into it personally if you are trading futures or you're trying to leverage some options data to guide your positioning a little bit in futures. Just know there's different time frames for it, and it can, in the vacuum, the whole concept just kind of dies, I guess it's what I'm saying. It just gets a little complicated and it doesn't always hold true in certain situations. So I'm just letting you guys know that we are based on some models that I use in negative gamma, but those could be completely inaccurate based on positioning on Monday. So just be aware. All right. So yeah, still trading around 60-20s. If you have questions, guys, please throw them in the chat. It's a little light right now. And if we don't have any more, I will give you guys more time back in your day and your Sunday. And hopefully we can find some trades for slow markets when I take over Dakota's show, because someone gave me the keys. So we'll see if we can have some fun later this evening. But for the time being, if there are no questions, there's only like one or two. So throw them in the chat. We'll grab them. But while we're doing that, I will recap the ES prep. So looking at last week's distribution, we are pretty much smack dab in the middle. Do we come back up and fill in some of this volume? Maybe make a trip back up to 60-80s, which would be roughly that 6,000 SPX strike. Or do we continue to kind of consolidate, fill in some of this volume, maybe rotate a little bit down further? Do we go retest the lows this week? I don't know. So naturally, I'm placing my pivot pretty much around or just below the Friday highs. This area, we just could not seem in the afternoon part of the session to get back above or hold, strongly above. In fact, there was a very large, not very large reoffer, but there were some sellers present in the 60-40 spot. And after a couple attempts, they did finally push us back down. And there was not a ton of interest in buying this above 60-30. So I am just taking that with a little bit of a grain of salt, putting my pivot there. If we get above it, like I said, I'd expect us to rotate all the way back up towards this 60-80s spot. If you kind of lose this, I would expect us to, travel back down towards 85s, losing that all the way down towards retesting kind of I would say the bottom edge of this range, somewhere around the 60s to 34 spot on ES. Yeah, that's kind of this higher time frame, low volume node down here. Yeah, around the 40s to 34 spot. So pretty wide range. Like I said, if we build above 60-40s, I would be trying to get long. If we fail here again and reoffer, I'd say if we can break below the, is that 5,900? Yeah, I think this is like 5,900 SPX. So I would expect this to also act as resistance for a little bit the more I think about it. But yeah, this could be a weird week, I guess is what I'm saying. So pivot 60-30, 60-40s. I might move this a little bit, but for the time being, I like kind of the Friday highs acting as a potential spot that I'm not looking to be the first person short. But I think if we continue to hold below 60-30s, a rotation back down into the 5,900, or sorry, below 6,000 ES makes a lot of sense. All right. So we will grab some questions here. How about that? Okay. Hey, Nick, the Z contract closed at 20,948. The H contract is trading where it's trading. I think at the time it was at 21,670. Do you think we go back to the NQZ closing price? Let's take a peek. I mean, around, what is that? You said 950s. I mean, it's very possible if we were to, okay. So if we were to break below 21,000 kind of for this 400 spot that where we broke out from on Friday, if you lose this area, I think it's very possible that on an excess low from last week, like if we were to pierce below the previous week low, that would be a potential very good spot that I could see us buying. And you could see that, this is kind of the bottom of that high volume edge here. Where you got a couple weeks of point of control and consolidation in that general spot. So yes, if you got weakness, I very much could see us taking out the previous week low and going right towards that spot where the Z settlement was for the Nasdaq, right around here, the 948s, whatever it actually was. I'm going off what someone said in the chat, so don't quote me on that. But if that's where we settled and just looking at this, it does make sense on a, hey, let's take out the previous week's low. That's where I could see us, potentially bouncing off of, if I'm being honest. You guys know the way we sometimes trade. Granted, we're very much moving to the bullish side here, but if you got weakness and you took out that low, I would expect that area to be defended. At least on the first attempt. But if you got real weakness and we were bursting through this, I mean, where do we go? Probably 800s, 750s. Yeah, I'd say that would be fair if you were to really get weakness. And then it just gets a little messy all the way down towards kind of the 20,400 spot. So, but the, like I said, the bottom of this, yeah, that 20,400 spot would probably be and like I said, the area that I would expect, whatever happens on this post FOMC reaction cycle that we are kind of potentially in, it all goes back to what are the election night lows? And they are right there, somewhere between that 400s to 350 spot. That's when I would say if you got a full rotation further back down, that's the area to watch. Just knowing that most of this rally is kind of based on, the post-election reaction. So if you're looking for a good dip to buy, I mean, it could, if we got real weakness, that's probably the bottom of the bottoms type spot where I would really expect, Yeah, I don't expect all of that to be just undone like that unless, if it is, we're probably going a little lower. So, and then we could talk about that. But for the time being, I am not overly bearish, guys. Outside of, you guys know me, my intraday shorts that I love to take for some reason at all-time highs. But the election area breakout is kind of what I'd be, watching as, the first lower side dip to really be looking to buy, at least on the first attempt. If you lost it after us kind of, you touched it, you came back up and we failed again, I'm not probably catching that knife, but I think for the time being, that's the spot to watch. But yes, I do think it's possible that you could go back and take out the Z settlement. It basically would be just piercing below last week's low, maybe tagging it and moving back up. We'll see. What assets are on your watch list? So for me, guys, I always have the Mag 7 in my watch list for TradingView. I do also watch bonds and bond yields. I do have the major indices up there. I do have SPY and triple Qs. From a few of the other names like Costco, I have the banks. They're all just kind of categories. I have the other tech categories like, CrowdStrike, Datadog, like Mongo, Salesforce, like some of the other more software type names in that space. Few defensive names, a few other indexes like VU and a few other tech names. I have Forex and some crypto in there to watch. And then people know this in some of my friends and stuff. I do have a garbage indicator. Don't hate me, people. I do have things like ARK, Carvana, GME, AMC, Peloton, Beyond Meat, Roadblock. So I do have some other high beta garbage type names that is a good indicator. And there's a science to this. Don't hate me if you're still holding GME for some reason. I know Jack just covered his, but I do have those type of names. And the logic would be, if you see all of those names bid on a day and we are trending to the upside, it's usually a good sign that you should not be anywhere near shorting this on the intraday. When you see garbage being bid, when you see, high beta tech being bid, and you see us maybe in a formation of a trend day higher, or in the setup for one potentially with maybe a breakout above the opening range and a retest that's already being defended, and you see those names being bid as well. My garbage indicator, it's just, a watch list, but I use that to also take a good peek on kind of what's happening with unprofitable garbage companies at times. So if they're being bid, sometimes it makes sense just to get along the train. But yeah, that's pretty much my watch list. And then I've got some of the international markets down the bottom, but I don't really look at them very often. I usually, if I was checking the overnight, look at the DAX or the Nikkei and other things like that. But yeah, and Doge is in my garbage list too. Good indicators on is garbage being bid. So I'll get to the next question. When trading micro GC, for example, would you look at the micro GC or GC ladder? Personally, I'd be looking at GC, guys. Even when I'm swing trading micros, everything's still cross traded. So everything I'm looking at is still on the mini ladder, mini candles. And then I just have my personal account set up to cross trade for those. So if I'm going to be swing trading micros, it usually would just be, in theory, executed based on what I'm seeing on the mini chain. They're pretty close. I think there's a good mix. Obviously, within a few ticks points sometimes, depending on the spread. But I'm not watching the. I don't care about the DOM on MNQ or MES to show me big orders. I'm looking at the ES one to figure out if I need to be executing. And I'm looking at Delta on the minis. So I think that's a better way to trade. It is a personal preference. It really is up to you guys and how you like to execute. But keep in mind, guys, I'm also swing trading, and I also trade minis most of the time on a short time frame. On a longer time frame, yes, I would rather be long micros that I can continue to scale into, in theory, a 4 hour, 1 hour type swing, where I don't necessarily care what happens in the next 30 minutes, and I can still kind of scale into the position that way, whether it be going along with the momentum or kind of scaling as we're still consolidating, maybe drifting a little bit lower. But it also then gives me a good out if I'm like, no, this looks like it's going to continue to move. But yeah, I use the minis. I watch the minis on the DOM, even when I'm executing with micros. What platform and broker do you use for options? I use Thinkorswim most of the time. I also have a smaller Robinhood account that I use for more degenerate 0 DTE type plays at times. But yeah, those are my two. It just really depends. What you like to use? I literally use like I said, it's more of a degenerate type play on Robinhood, but it's mobile. That's kind of why. So usually if I'm executing on there, it's the very short time frame type move that I'm looking to capture, because their spreads are garbage. But yeah, that's kind of what I use some days. But I don't have a ton of cash on there for a lot of reasons. It's too video game-esque of just entering on Robinhood. So I'm very careful keeping too much capital in there. I also don't trust them at all. So do you ever trade ES in slow markets? It is really slow compared to NQ. Yes. In Globex, ES is very slow. I know we're having a more volatile breakout, gap up type situation here, but yes, ES is naturally going to move a little slower than NQ does. Going to have a lot more on the DOM as far as orders compared to NQ. So it's just naturally going to move. Doesn't usually have a spread even in Globex unless it's really volatile. Do I ever trade it? Yes. Is Globex my favorite session to trade? Absolutely not, because I'm a pretty bad Globex trader. It's gotten me into trouble the last, when I have traded it the last couple months. So, and I've traded it in my live account at times, and it's always like, why did I do that? I take a loss, and then I'm pissed off, and then I got one less trade in theory that I can work off of to start my day during the New York Open. So I'm not a big Globex trader as it is, but we're going to see if we can find a trade later tonight. Maybe we'll take something in micro Bitcoin for all I know with a combine. We're going to have some fun, hopefully find something that we can actively get into, but we'll have to wait and see, guys. So that is all of the questions, unless there's anything else in the chat anyone wants me to go over. Yeah, hope everyone has enjoyed the prep, has gotten a good idea of where we may go this week. Keep in mind, it is Christmas week. It is a holiday. We very much could just chop and consolidate. We could have a very violent move one way or the other. It could be super low volume. It could be very high volume the next session and a half. We will see. But yeah, guys, that's the prep. Pivot on ES, going to be that 60-30s to 60-40s spot. So head on a swivel this week. Holiday weeks always can be a little weird. But hopefully we get a good trading day and a half that we can find something. But as I said, if you are green this year, if you've had a good December thus far, do not screw it up this week. But we'll see if we can have some fun. I will be on Fast Markets tomorrow for part of the session. I have to do some daddy duty. So we're going to do an abbreviated Fast Markets for me, but I will be on TopstepTV tomorrow morning, as well as taking over the slow market session tonight for Coach Dakota, who I hope is feeling better and I hope is back to his full strength this week. But we have missed him, so hopefully he has rested up and the medicine he's been taking has been working, and he will be back to give you guys a real crash course on trading the Globex session, since I am just going to do my best and see if we can have some fun. But come ready, come prepared with some questions. Hopefully later in about 90 minutes, we'll be back. If you're tired of me already, I'm sorry. I'm taking the keys to slow markets. So we'll see if we can have some fun. If not, I will see you guys tomorrow on Fast Markets. But everyone have a great evening. Enjoy the rest of your Sunday. And if you're going to tune in, come back with us in about 90 minutes. We're going to have some more fun. So